This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Wednesday, July 6th. Well, we had some massive moves overnight. Last week, if you remember, there was a little bit of a relief rally and risk-on came back into fashion. Those times are officially over. On the contrary, the action in the pound just proves the old market saying that just because it's cheap doesn't mean it can't get cheaper. The pound was off some 2.1%. on a trade-weighted basis, while the yen was up 1.7%. Obviously, and then sterling yen was the trade to be in, as that pair fell 3.7%, a huge move in the currency market. Euro sterling, on the other hand, was up 1.9%. There's a lot that's worrying people about Britain. Bank of England Governor Carney yesterday warned that there would probably be, quote, a material slowing of the economy, unquote, and reiterated that the Bank of England would take action to support jobs and growth. That implies a material lowering of interest rates, which is one factor behind the weaker pound. He also said that the fall in sterling had been necessary and that it should assist exporters, which essentially means he's endorsing the move. So we can't expect any intervention to support the pound. Also, three of the UK's largest real estate funds had to stop allowing redemptions as investors rushed to get their money back. That's always worrisome when there's such a rush to sell that funds can't give people their money back. If you remember, Bear Stearns did that in the early days of the US real estate crash, and it was one of the signs that a crash was coming. The move is just one start of the process of Britain adjusting to Brexit. It suggests that the UK commercial real estate sector is extremely vulnerable. Now, this graph shows the performance of UK real estate stocks relative to the market as a whole. What a collapse! When you consider how much of Britain's wealth is tied up in real estate, it's no surprise that sterling responds to signs of weakness there. Now, sterling fell to 130, where it traded 13 times before bouncing, but it finally broke through that level and is trading below 130 in Europe this morning. Meanwhile, dollar Canada is moving higher as oil prices fall, and now dollar CAD has crossed cable, which is a relatively rare occurrence. Meanwhile, euro dollar fell below its 200-day moving average, suggesting more weakness ahead as the Italian bank problem comes more into focus. For an update on the U.S. indicators coming out today, please watch my North American opening market comment later today. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.